Hello everyone, welcome to this fireside chat with Fluent Finance. I'm Diva, I'm part of the developer relations team here at R3. And we also have Janine with us, so he's also part of the DevRel team. Welcome everyone. So today with me, I have Bradley Allgood, CEO of Fluent Finance. So Fluent Finance is building a very trustworthy stablecoin in the form of US Plus. And on the personal front, Bradley has over a decade years of experience leading novel product development, technical architecture, venture capital, blockchain business development, and strategic acquisition. So, Bradley, thank you for joining. I'm really glad to have you here today.
Yeah, glad to be here. Thanks for having me.
Yeah. And So for the people who have joined us here, so thank you for joining. I will be interviewing Bradley about his company Fluent and what they are doing and how they are doing their bit in shaping the future of finance. We will also be taking audience questions. So feel free to post in your questions. There's a Q&A section at the bottom of your screen. So you could post in your questions there and I will stop at regular intervals to get your questions answered. So starting off, Bradley, if you could sort of explain us who are you, what your company does, and how did you start Fluent, and how has your journey been so far?
Yeah, I guess I can give you just a little bit of background about myself. So I've largely been focused on economic development and transforming legacies for the last 7-8 years after I got out of the military. I immediately jumped into economic development, founded a large nonprofit around special economic zones. So those that don't know what special economic zones are, they're really focused on creating economic development through innovative policy and small pieces of land within a host nation. So if you've been to Dubai, DIFC, Abu Dhabi Global Markets, those are examples of SEZs there, Hong Kong to China, and they're really throughout the world. There's thousands of them, and they've created mass amounts of prosperity in all the nations that they've operated. During that process, I realized that there were even bigger gaps in how governments interacted with their citizens. So I started getting into digital transformation of governments using blockchain technology. I did a lot of the early sovereign identities, people registries, property registries, tokenization of carbon credits, commodities, really almost anything you can think of, and did it on both public and private chains using both non-fungible and fungible tokens. And really spent a lot of time working with governments and getting stuck in their bureaucracy. Moving anything from a proof of concept into production takes a significant amount of time with the government. So about 3.5, 4 years ago, I dove right into commercial banking and really financial access. It was really driven by the sheer number of unbanked and underbanked in the world. And I knew what cryptocurrency could do to solve last mile payments and last mile reach to end consumers, enabling them to bank themselves. So, I set out on a travel. I spent a lot of time in Asia, MENA, Latin America, and the US, and I hosted roundtables and talked to regulators, tier 1 institutions, innovators, technology providers, and really started to getting an understanding of how the difficulties that the traditional finance world was inherent to be able to adopt new and innovative technologies. And there's a broad range of them, right? It's everything from understanding general ledger accounting on a new asset to compliance policies, procedures, regulatory clarity, among others. And so at that time, I saw a really good opportunity now that I had bridged both worlds. I built a lot of blockchain and distributed based systems. And now I've also started building a really big network of tier 1 institutions and integrators and core banking systems. I thought I could kind of be a good connector in between. And so I went out to market. I hired a few really senior MDs from HSBC, Citi, Barclays, and educated them on new innovative technologies for custody, better digital identity, and went out into the space and started looking for top tier projects and helping them modify their product and their technology and helping them co-sell into large banking providers or core banking system providers or integrators. During that process, I met my co-founders. So my co-founders in Fluent are Oliver Gale, who is one of the co-founders of Central Bank Digital Currency. He did the first one in the Eastern Caribbean. He went on to do them in Nigeria and has really been an innovator in both DeFi and crypto space for a long time. And my other co-founder and CTO actually did the core banking systems of the Eastern Caribbean Central Bank during the first CDBC. So we really kind of saw this gap as we put our heads together and how we were going to connect these two worlds. How do you bring traditional finance into a world where, and for up until then, and throughout the DeFi bull run, they had no interest in participating in traditional finance. Yields were great. Access was not a problem because profit seeking was the main motive. And so we really wanted to see how we could connect these two worlds in a more efficient, more user experience way, but also to do it in a fashion that embodied both, the non-custodial digital asset component, as well as something that's low counterparty risk that banks and traditional financial institutions could participate in. And we deemed that, a stablecoin was the best way to do it. It's the closest way to the way that banks currently operate, where they have a similar general ledger accounting, a similar form of currency that they're, digital form of currency that they understand, and also embodies really the core concepts of, what is great about public distributed ledgers, and that's non-custodial digital assets. That means, you have your public-private keys right here, and I can send them to any other people's public-private keys anywhere in the world, regardless of where they're at. We spent a lot of time looking at existing stablecoins, understanding why, what were the gaps in the market. And we found that, we found gaps both on the retail side in terms of transparency, also taking all the counterparty risk and not sharing in the upside, and many of the yields that are generated based off reserves. And then if you look at the larger, more institutions, the counterparty risk was significant for them. There's bankruptcy risk, there is lack of regulatory clarity, there is lack of regulatory oversight, there is, the natural way that many of these stable coins are going to getting a banking license themselves and being competitive with these banks. So what we thought we would do is do something that solved a lot of these problems. First, we focused on the centralization risk. Every large stablecoin issuer today has a huge centralization problem, whether it be on exchanges or single governments. We decided that we would do a consortium of institutions. And so we started to kind of model that out and see what it could look like. Then we wanted to solve the transparency, and we figured the best way to do that is get as close to the core banking APIs as we can and provide a real-time or close to real-time oracle that anyone can see and everyone can verify rather than just trust. And then from there, how do we improve the user experience? We wanted to dive into something that would enable people to go from just their bank account directly to stablecoin in their non-custodial wallet and back. And that's largely what we built. So I understand that was a ton of information, but very high level, it was a focus on connecting those two worlds, and that's what we solved for.
Hey, thanks, Bradley. That was a brief introduction, very on point. So I see, like, with stable coins, a number of customers don't trust the ecosystem. They don't trust the party that are hosting the stable coins. There have been recent incidents which had raised concerns with the people. And I see that with Fluent, you're building up a stable coin which is fully federated and which is fully trusted. And it will be governed by the federation, by the consortium of banks that you're referring to. Is that correct?
Yeah, that is correct. And the main goal is single counterparty risk. This is one of the main tenets, and many people and many projects that have been built in crypto have forgotten the main tenets, which one of them is no single counterparty risk. And so because we have the consortium of financial institutions, the custody is then federated, right? So if there's one bank that has a bankruptcy or a bank run or something, abnormal happens to one of them, then you're only taking a small blip of the total of the assets because they're all at various different financial institutions that may not be exposed to the same level of risk. And so that was kind of one of the key focuses.
So with US Plus, what are the problems that you're trying to solve? I mean, you highlighted about the counterparty risk, but I want to understand, like from a customer standpoint, how the scenario will change, and what are the general use cases that people would find directly applicable?
Yeah, so I mean, obviously the the problems we were initially looking to solve were problems that were detailed, that I detailed earlier in stablecoins. But once we started getting into building it and delivering the product to market, we realized that we were solving a lot more than we just initially expected. So main things that one of the main things is when you're onboarding, usually when you're onboarding through stablecoin and offboarding through stablecoin, you have to go through a centralized exchange, which means there's a layer on top of your banking system. And often there's restrictions on how long they need to be on the exchange for before the assets can be taken off. There's also, limits that you can take on and off. And it adds a whole layer of bureaucracy and reduction of user experience just to get access to, potentially liquidity. So what we were able to do is, because we go directly from the core banking APIs to a non-custodial wallet of the person that's bank account it is, we enable them to direct on-ramp to DEXs, direct on-ramp to protocols, and direct on-ramp to layer ones, which means they have a means to only have that relationship with their bank and not having to expand outside of that to go from fiat to DeFi back to fiat. And that's extremely impactful because you're taking another major tenet in the cryptocurrency space that again was long forgotten for the sake of profit seeking, was remove many counterparties, right? You don't need as many counterparties in the chain to deliver a service, and the less you have and the more you can automate it or make it protocol driven, the better the product is going to be, and the less reliant it's going to be on human interaction. And again, it comes down to verifiability rather than just trusting that human is going to do what you expect them to do.
Yeah, all right, all right. So, like, just like giving a brief overview, like giving a summary to the listeners. So, basically, with Fluent, what you could do is you could directly use your bank as a channel to purchase a stable coin, and then you could do all types of operations that you are generally do with any stable coin. And then, even in case of redeem, or even in case if you want to exit the market, you could directly do so via the bank. So, this is the overall, like, this is like a very simplest explanation that I could give. But thanks, Bradley, for explaining that to us. So, can you please also more highlight more about the Fluent Federation Bank, and how do you ensure the legitimacy of assets or reserves that you have with that federation?
Yeah, so well, first we tie into the core banking APIs. So we get a real-time kind of monitoring, or as real-time as the core banking APIs can provide monitoring of what the collateral in those accounts look like, what the reserves look like. From there, there's obviously some reliance on the regulated entity, that they're not doing anything illegal in the background, that their reserves are managed well. But those are significantly regulated entities, so there's a high bar for them. And we provide, as much real-time data as we possibly can get to make sure that that's the case. Furthermore, we make sure all of our consortium members are only investing in very select types of products with our reserves. So, largely cash equivalents. So we're a cash and cash equivalent as of today. So that's, looking at treasury bills with really short durations, that can quickly be, remunerated into liquidity. And as you know, treasury bills right now are a great investment, and they're only going up, right? So they're 4% now, but they're likely to be 5 or 6% within the next 6 months to a year. So that still offers, a lot of opportunity, economic opportunity. We are obviously have built a high level kind of rating system for the different types of consortium members. So when we start to onboard them, we evaluate, how new and robust is their core banking system, how much liquidity, how big is the bank, how many assets under management do they have, how much can we trust that they can, do they have a long history of successful operations in this industry, or, similar innovative fintech industries. All these things are things we evaluate as we start to onboard to the banks, and we try to do our best to give them, a grade rating, and we really only look to partner with banks over a certain grade of rating.
So all right, you have like all the checks that are generally linked with the open bank core APIs, and that you have it integrated in your entire ecosystem. So I think you have multiple layer of security with the entire reserve management or the asset validation, I guess. So also I will pause here for a few minutes and see if we have any questions. So I see a user who has asked, are you planning to issue stable coins based on other currencies?
Yeah. So we're already in discussions with UAE counterparts to issue a AE plus. We've started discussions about a euro-based stablecoin, though I think some of the over-collateralized stablecoins in Europe right now have done a really good job of providing a euro-based DeFi-enabled stablecoin. So there's really two ways to access those markets. Is either we provide collateral for those euro-based stablecoins and allow them to over-collateralize, or we issue our own alongside them. And so also Mexican pesos, that's another one that we're really far along with. And we're looking to do a US dollar stablecoin, but with local banking in Africa. So we're talking to multiple banks across 36 countries in Africa to be able to provide US dollars denominated stablecoin that then can turn into local fiat. Given that the main thing when deciding whether or not to expand the stablecoin to a new currency is how volatile is the currency. And the more volatile and the less, like the smaller the country, the smaller the GDP, the less requirements you would want to use for that stablecoin, because many of those users, like in Argentina, they'd love to hold a US dollar denominated stablecoin, right? To segment some of their risk away from, I think it's been over 100+% inflationary problem that they've had with their currency.
Yeah, I have another question from a listener. So are you 100% backed by USD, and how can I verify that? So
Yes.
okay.
So cash and cash equivalents. So it's either US dollars or US Treasury bills. So they're really kind of, the highest quality and lowest risk and highest liquidity asset that you can possibly hold. It's backed by the US government, so similar to US dollars. And you can verify at any time. We have a live Chainlink feed, so you can go and go click on the Chainlink feed, and you'll see the combination of the consortium members and their deposits and the stablecoin issued.
All right, so I think that those were the questions from the audience. So for the listeners, please post in more of your questions on the QA, and I will be taking it with Bradley at the end of the session. So thanks again, Bradley, for answering all the questions. So I have another question. Now that we have discussed like all the non-technical aspects, I would like to move into the base layer, which is the DLT. So I would like to ask why you chose Coda as your DLT platform. Why didn't you go ahead with other platforms, like other enterprise platforms that are out there, and why Coda became your choice?
Well, I mean, Corda is by far gotten the greatest adoption from institutions, tier one institutions in the banking space. Also has significant adoption for multi-tier one banks doing tokenized deposits. So there's a little, to give the listeners a little context, there's kind of two schools of digital dollars that can be enabled by blockchain. There's tokenized deposits, which act as like a core banking system. It's a value that is debited and credited. And then there's stable coins, which are like a non-custodial fungible asset that people can hold and do with as they will. And I think that in regards to tokenized deposits, Corda has done by far the best implementation. From a technical perspective, their notary is great and enables identities private identities to be passed throughout an ecosystem. So also they built something from the basis that was intended for a consortium. And what we were looking to do was have a consortium or a federation of banks be interoperable and communicate to each other and transfer balances between each other and share identifiers or identities between each other. And Corda was perfectly built to do that. We issue to public blockchains. So we go from our Corda layer to vaults, and those vaults then go through a set of smart contracts to multiple layer ones. So, we really kind of get the best of both worlds with this, is where we have the value issued onto the private blockchain layer, which has, incredible speeds and benefits that you do get with a private blockchain. And then we get the borderless payment instruments, the trusted issuance from a Corda node directly through a smart contract. So it really gave us, the blending of the two gave us really everything we would need from a technology perspective.
All right. Indeed, like with Coda, a number of our customers are bank, and we have strong capabilities that support like regulated infrastructure. So, like coming back to the consortium that you were referring to. So, I would like to know, like how does the consortium operate in case of Fluent? So, like if new parties to be added to the network, so how do you decide if the other banks are on board about the new bank or not? And how does the consortium overall govern within the Fluent Federation?
Yes, so there's stages to the consortium. As a startup, we set out to build a consortium of banks to be able to issue a stablecoin from, and that alone in itself is a pretty difficult task for many in the blockchain space to successfully do. And we found really great consortium members in a variety throughout the US. US was our launch jurisdiction. And the first step is, we get our own licenses so we can issue, because banks in the US cannot issue stablecoin yet. So we get our money transmitter licenses to enable us to do the issuance of stablecoin, and we have a relationship, like a fiat depository relationship with these banks. And that's kind of stage one, right? We go through the risk and compliance. They understand our business model. We also get to evaluate their risk and compliance during that process. And then ultimately we pass, they open us an account, we get access to their APIs and start integrating. And that's stage one. And that's been largely what we've had to do with our first, I think we're at about 6 consortium members, both onshore and offshore right now. That's how we had to go through our first 6 consortium members. And now we're getting to a place where we're getting these consortium members through beta. Just finished our first one through beta at the end of last year. And we're starting to expand out their usage and open up the governance component of it, right? So we have a federation agreement, which has high-level governance and how the committees and subcommittees will act, and it's really based off of a lot of if you look at the olden days of Visa, where Visa was a consortium, and the consortium members actually affected the governance of that consortium, and it's done in a largely manual process. And that's kind of the next stage of the consortium. And as we expand the consortium out to other jurisdictions and other countries, we'll be able to have those all be interoperable and communicate and govern together. Though the ultimate governance is related to the central bank in which you're operating, right? So like if you go into any jurisdiction, that form of governance has to adhere to whatever the central bank, hence why we work with regulated banks. And then the third form is really, the final form that we're looking to implement is a DAO governance, right? So we all come from a lot of DeFi and crypto background, and we know the benefits of distributed governance when implemented correctly. And so we're looking to issue what we call bank tokens to each and every federation member, which is one bank, one vote within a consortium, and each consortium will be related to, again, that central bank that they're operating under. And also we expand the governance beyond that. We have a governance token that will enable all users to participate in setting fees on the network, and depending how the DAO treasury spends its money and stuff like that. But that's obviously the third form, and that will be coming to life after the consortium itself has a lot of assets under management, has a lot of revenue generation, and then we'll be able to kind of build the DAO on top of that. And also, as you can imagine, banks are not super comfortable with holding crypto. Even if it's for a voting mechanism, it's a long stretch, so it takes a lot of time and education to get them there. But I think we're really close to that.
So I think that people have added in their question. So there's one question: how do you manage the EML and sanctions process with Fluent?
So this is kind of the strong, I guess I'd say, brilliance of the way we built this protocol is that we only issue for clients of banks and our consortium. So the protocol, and when I say we, I mean the protocol, if the bank everyone goes on through KYC, AML, KYB of the bank, gets onboarded and approved by the bank, and then becomes a client of the bank. And if the bank allows you to transfer from your operating account to our reserve account, the protocol will issue. If the bank allows you to transfer out of our reserve account into your operating account, the protocol will burn. So really, we're leaning on the regulated entities globally that have a real good understanding of the actual local AML risk, actual sanctions requirements, all those kind of things, and how they operate and how they report to their central bank. So meaning we don't have to have, we have a phenomenal chief compliance officer, was one of the early employees at Paxos, and built all their compliance regimes, but we don't need a robust, massive compliance team in the back office. Really, we work and lean on those regulated entities to do that for us.
Also, I wanted to ask, I mean, you said that with US Plus, you could directly interact with layer 1 currencies. So which are the currently which are the currencies that are supported?
So XDC was the first one we launched on. We had a really great relationship with a lot of the early players in that space, and they're very trade finance focused, also heavily related to R3, as you know. And given that they're focused on trade finance, we saw a really good opportunity for our stablecoin, given it's issued from a consortium of banks, that trade finance is a great use case for us. We're looking at really high dollar cross-border settlement times are a pain, trust and transparency is a pain, and we really see an opportunity to transform that. So that was our first layer 1 we launched our beta on and kind of tested out. Now we're on Ethereum mainnet, Polygon mainnet, and Optimism mainnet. And we'll be, one of the very first things we do when we go into a protocol is we look at the DEXs. We start to try to figure out how to get liquidity on decentralized exchanges. So there can be, retail flows and access for the stablecoin, and then go out to the main protocols and figure out how direct on-ramps are beneficial. And another kind of use case that we have is that we're not looking to take the whole money market, as we invest in T-bills with the reserves, we're not looking to take that whole yield. We often share that with different types of partners in each and every ecosystem that we operate. So it opens up, an additional incentive to, ditch the less trusted USDT or USDC if you're just holding it, and really flip into US Plus, flip that liquidity in US Plus and gain some yield on it.
So I see people are asking me more questions. Let me just wait a minute. So what is your current roadmap? What is your current roadmap look like?
Yeah. So we are rolling into production our the next 30, 45 days or so. And we are starting to expand out services to various different protocols, expand out access to people that need it, helping getting people bank accounts so they can issue and redeem US Plus. And then I think another part of that question was asking about our TGE. So the stablecoins obviously generated TGE related to our governance token. We're expecting to do probably TGE if the market recoups, looking at Q2, Q3. To be listed on exchanges and go through that token generation event for those that don't know what TG is.
Another thing I wanted to ask is, like in terms of the technical infrastructure, how does your current network look like? So how many CODA nodes do you operate? And so are you part of the CODA network, or do you have your entire network self created or self managed? And yeah, so
Yes.
basically everything from the technical side. Yeah.
So we were really fortunate to get some brilliant minds from the engineering team at Corda to support us in our launch. Also, we had a few of the team members of engineering team at Corda join our company early on. So we actually had we've built and host our whole enterprise Corda implementation. We have multiple nodes. We put up a node for each and every bank member. We also have a few other maker checker nodes and security nodes that we've implemented as well, and a slew of very, very interesting and impactful core apps. And we're definitely looking to bring this solution to a lot of the mid-tier banks in the US, as they really want to start experiencing and tokenized deposits, but they don't necessarily have the capabilities to hire a whole Kotlin team to be able to run a Corda node and an implementation themselves. So we'll be looking to kind of expand those services out and to multiple mid-tier banks globally and US locally.
Right. So there's another question which is asking if what do you think about non-banking federation members like insurance companies or credit institutions?
Yeah, so I think regulated institutions are all on the table to some degree. Right now, when we're looking at federation members, we're really looking at banks and highly regulated like trust institutions. And those trust institutions obviously need a depository bank that they're operating out of. I think there's a huge opportunity for insurance and other regulated entities, brokers, security brokers, that can start to add new services to the ecosystem. So right now we're only in the banking vertical, right? Which is a big vertical in itself, but we wanted to solve that one seamless UX between fiat in your bank account to stablecoin and DeFi. Now that we've solved that, and we can look at other consortium members that can maybe offer access to products to DeFi, because that's a huge demand right now. As you can imagine, a lot of the crypto ecosystem and the hundreds of billions of dollars that are operating there really don't have as many trusted products to go to, right? Like they just lost one of the biggest exchanges that they thought they trust. One of the biggest stablecoins, algorithmic stablecoins, blew up earlier this year. Celsius, which was and Genesis, which are some of the biggest lenders and providing financial products to the ecosystem. People have lost a lot of money, and it kind of makes them scared. They don't know if the next bankruptcy is going to be Circle. They don't know what's going to happen with Tether. They don't know if holding the stablecoin in cold storage is going to be safe. And how do they just don't want to sit on stable assets, right? And deal with the volatility in the market, and then have that money sit idly and not gain yield. So the really interesting thing is when you start opening up like securities brokers, access to treasury bills, bringing that to the crypto market, access to high quality credit and bringing that to the crypto market. Now that we have this seamless flow between the two, we can start opening up new products to those markets and ultimately enable people that want to invest with US Plus in these products, enabling them to do so in a really, again, seamless UX fashion and gain yield on those investments, right? And that's kind of, some of the things we're bringing to market right now with some of our partners, because we know that these are just in very high demand and very high need in the market. Safe, trusted yield, and verifiable assets.
So I will now move towards the non-technical. So there's a user who is asking, how are you reacting to people fear for crypto collapse nowadays?
Well,
that's like a general question for you.
yeah, no, I mean, it's kind of, frustrating for me for being a builder in this space for as long as I have, and building, things with an intent of verifiability, lack of centralized counterparties, and, removing the trust molecule and replacing it with verifying assets, and seeing that all of the ecosystem didn't really do that, and it really blew it up. We took a massive hit this year in terms of our trust of our ecosystem, right? We don't know what exchange we can use. We don't know how we're going to effectively on-ramp. We don't know which protocol may blow up next, or, you know, what leverage protocol could go down. And so I understand that there's a lot of people that are having, you know, trust and concern issues within the space, but really what Fluent was built before any of this happened was solving these problems, right? We built something that was always verifiable, right? That never has that single centralized counterparty that you have to trust. Like, if you don't like Federation member number 1, you go to Federation member number 2, and you get a whole set of, you know, a new banking relationships. You don't like being US centric, you go to a Federation member in the UAE, and you don't have to be US centric. And all those kind of things are really key components that are necessary for the future of crypto. And the future of crypto is moving away from these opaque, you know, semi-collateral backed assets and exchanges and, you know, fake yields, to real financial products, and using the underlying technology and its borderless nature to impact efficiency of capital, right? And to open up ubiquitous access to everyone to be able to participate in those type of products as well. So what I would say is, you know, continue to distrust, like, and only participate in products that verify. And so you can verify, then you can trust, and then you can verify again, right?
All right, thanks, Bradley, for explaining. So that was a really good explanation for people about why they should trust US Plus and Fluent. And let me just see if there are more questions. So I think that was it. We are done. So thank you, Bradley, for joining us today. It was really great to have you. And it was really great to know about the company, about the stablecoin, about your roadmap for the future. And we wish you all the best for the future journey. And thank you again to our listeners for joining in. I have a small request for you. So, like, if you could kind of just fill in a survey for us, so it will help us organize such more webinars and events for you in the future. So I will just post in the link in the chat. So I hope you guys have enjoyed the session, and Bradley, really thank you for accepting our offer and appearing for this interview.
Yeah, of course. I was happy to be here, and I appreciate the questions. I think a lot of the ones from the crowd were spot on. So look forward to hearing more, and always happy to come on.
I will also post in a link to Fluent in the chat for people who want to know more about the company. So I will pause, I will wait for a couple of minutes. You guys could go ahead and fill in the survey. And as for our upcoming sessions, we have 2 webinars planned for this month, which will specially target CODA 5. I know this is exciting because this will be the first piece of content that we will release about CODA 5. And so CODA 5 is the upcoming version of CODA, and we will be discussing more details about the new version. And so feel free to register for the same on our developer portal. And thank you guys again for joining in. And I think we could end the session now. Thanks, Bradley, once again.